You may have just entered the fattest opportunity to get into crypto, but it could be the hardest thing that you do. Now, leaving the dad jokes aside for later in the video, we need to turn our attention to what has just occurred on the Bitcoin chart. Now, I've got a ton to cover in today's video, going through plenty of data. We want to look at the facts, the data, the charts, remove the emotion, unlike some of our friends over here like Kathy Wood that just go on and on about moon boy price targets, which we'll cover later in today's video. Now, I'm getting very excited by this data. So before we blow the load prematurely, hit that like and subscribe button. It is your home of macro cycle analysis, covering Bitcoin, the stock markets, crypto, of course, the degenerate altcoins out there, and the real estate cycle, which I've got for you in today's video. Now, for a quick one down below, Aussie's SwiftX link is down there. It's a sponsor of the channel. You can use a link, you don't have to, and the same deal for BitGet and Bybit. Now, if you want to keep these things as no KYC, check out the Palau ID card that you guys can get in the mail. Plenty of big bonuses there. And if you do use the links, we will have some fantastic trading workshops coming up for you guys. All right, on to the video. Macro cycle here, looking at the real estate cycle. We are still in that up phase, and I just bring this up prematurely in the video because I can't believe that some people still think we are in a recessionary cycle due to interest rate hikes. Okay, we are not in a recession. We're not in a recessionary cycle. We are in an everything bubble. It's a massive bull market. This bull market will come to an end. And yes, then you can blow your load over the collapse and the recession and all that sort of bad stuff to come later this decade. I'm not saying it's never happening. Right now, we are very much in the stages of heading up into the winner's curse. Now, you've seen me put this one up here. This one is a representation of the current cycle we are in, the real estate and economic cycle, essentially your real estate and business cycle. So if you hear people refer to that, this is what you need to look at. We are here and we're leading up into that area where everyone gets super excited and they blow their loads at the top and basically get destroyed on the way down. Apologies to my 7% of female audience talking about all of this jargon. Let's increase that female audience past 10% and I'll cut back on the ridiculous dad jokes. All right, guys. So first up, we are not in a recession. I know it is very hard to think that for some people, but anyway, moving on, not having to go at anyone, but it just needs to be a little bit clearer, I think. So where we are in this cycle is heading up into the winner's curse phase. No matter the bad news, the good news, we are seeing prices increasing. There are short-term pullbacks. We've seen that. We're going to cover that in today's video as well as we looked out for this rally and a rejection at 43,800. We were calling it 44,000 as a round number. We have had a short term. We're only on the daily chart here, and on the 4 hour, you will see that it is a rejection at this point in time at the 43,800. Now, in terms of good news and bad news, let's cover some of these headlines, as I typically don't get into a lot of the news into great detail, but just for the headlines, like we saw with the interest rate talk, we can see interest rates pause, go up, go down, and the market can still go up. We've covered that in previous videos. I know many people still think that even with the interest rates going down and the pivot, that means the markets must collapse. We still have time for that. Eventually they will turn over, but we still have some time. Now, the other thing that has come up recently is Evergrande getting liquidated. If you were looking at financial news back in September 2021, you may have remembered the talk about Evergrande. 300 billion, second biggest Chinese property developer. They were looking to go under. They have now done that. The Chinese market has been down. It's down about 46%, but it doesn't seem like it's having too much effect on the market now. My interpretation is that it has basically run its course through the market. This is for the US markets, Europe, Australia, Canada, etc. Back in 2021, because that's when the most fear was around. Sparks fears of systemic contagion. Now, right now, it's not having an effect. Maybe when the market's ready to roll over, as we've been looking at here, after sort of 2025, 2026, then this might come to the forefront again. But for now, it's another piece of the wall of worry. bad news, and the market continues to climb on it. Now, we are expecting a correction for the stock markets, but we're not expecting things to collapse and go past significant lows. I've covered that many, many times before, so let's move on, and I'll continue to update that in future videos, so you know to be sure to hit that subscribe button on the channel. Now, Hong Kong receives its first ever spot Bitcoin ETF application amid increased US interest. So some great things happening there. There are your headlines. Is it happening? When is it happening? All those sort of things still need to be confirmed, of course. You can see, according to the source, SFC is going to speed up the approval process with plans to list after the Chinese New Year, which is on Saturday, 10th of February. Now, it's just saying plans. There's no confirmations. We can expect that it may happen. Again, it's a news headline. Let's just keep it as a news headline just to let us know what's going on around there. But we are not trading off these things, okay? Same thing right here. We are not trading off our good friend Cathie Wood's advice. At least I'm not. Any of her advice, to me, is absolute dog shit. I'll say it again. Cathie Wood's advice, absolute dog shit. She makes her money from her fees on the ETFs. So I'm not interested in what she has to say. I know many do love what she has to say, especially when they look at the Bitcoin price post halving 1.5 million. And yes, I hear you now. It's saying up to 2030. Bitcoin is not going to hit 1.5 million by 2030. I would almost guarantee that, and I can't say 100% because at the end of the day, no one has a crystal ball, but it's like saying Bitcoin's going to go to $1 million by 2030 or 10 million or any of these stupid things that pretty much never happen. But when you're very excited by it and you want to buy Bitcoin, you want to hear that the price is going to go up. If it's at 40 grand now and it could go to 1.5 million, then you do your multiples and think, shit, I can make a lot of money in a few years' time. Great, let me go and buy this from Cathie Wood. Great, Cathie Wood makes her fees. Same deal for the rest of any of these things here. They're going to buy some papers here. I'm going to buy some subscriptions here. I'm going to buy my Bitcoin there. They don't have a date here, but anyway, you get the gist of it. Essentially, I'm going to go buy my Bitcoin because I think Bitcoin's going to 300, 250, 600. It's friggin' garbage. Please don't get sucked into that. And I see some comments, unfortunately, still getting sucked into it. BlackRock and Van Eck ETF ads live. So the interesting part here, they are news headlines, but the real fundamental change here is that Google is allowing crypto and Bitcoin ads to go live now. That's the difference between getting hyped up about news headlines and just understanding what changes are going on in the industry. Previously, Google, Facebook, they all sort of got rid of crypto ads, or they were basically shadow banned, blacklisted. You couldn't do anything on those platforms. Google is now opening that up. So maybe we're going to start to see a little bit more interest in that. I wouldn't just go and trade off this news and say, great, that's happened. Let's go and buy Bitcoin because of this news. It's ridiculous. Go and use a chart. So back into the fattest opportunities of this decade. This is the mid-decade bulge. It lines up very nicely with the 18.6-year real estate and economic cycle. What this is saying is going from September 30th, year ending in 2, through to March 30th, year ending in 6, so that's 2022 to 2026. Those years are typically some of the most bullish years that you can see in the markets. Years ending in 2, going up to years ending in 6. Now, one extra piece of incredible information I can give you that you can layer on top of this is if you look at the years where it is in the second half of the real estate cycle, it may do even better. So rather than the years of 2012 to 2015, which were actually pretty good, and 2015 then had the correction, then looking forward to 2022 into 2026 is possibly going to do even better because we have those crazy years ahead. Now, either way, the data just suggests that both of them are pretty good. This is what Gann also said as well. Basically, years from end of the year ending in 2 through to that early part of the sixth year are typically relatively good. Now, check out the data points here over the last 100 years, okay? 1922, 32, 42, you get it all the way up to 22. So the end result here, the end dates, you're going to go forward about 3.5 years, if I've got my maths right. You have a 40% improvement there on the SPX. 84, 100, 97. You have a negative here of 7%, so that's in the 70s. And some will say, well, the interest rates, there was inflation through that period, just like what we have now. Okay, maybe that's the case. Maybe we get one of those again right here. I'm not anticipating that based on the ton of data that we've looked at already on the channel. And of course, if we had more time and you wanted to sit through a 2-hour video, then maybe I could get into everything every single day. But here we are, 100%, 54%. This is essentially saying from the data, the facts, not my opinion, that the markets love this period. Years ending in 3, 4, 5, and then basically starting end of 2, finishing early in the 6th, have all been relatively good years to be in the markets. Now, as I said, I've got a ton of data to get through. I'm very excited. This one, I'm going to try and make it as quick as possible so that you can get the ideas that are going on here. This is the stuff that is happening out there in the face of the fears of Evergrande, in the face of the interest rates rising. This is what is actually happening in the markets using the data and the probabilities. Now, the S&P after record high, which the S&P has hit a new all-time high, and it continues to do so day after day. Sure, we have a few pullbacks. With IT, the only sector at high. This is letting you know about a fearful topic and flipping it for you to something that you can actually use. You're looking at the data from what a fearful headline was. Remember, maybe you don't remember, but I'm just reminding you, 2022, 2023, there was the fears that the market breadth was not enough. There wasn't enough stocks taking us into new all-time highs. And there was only a few stocks taking us higher, which is a bad thing for the market. And then that flipped. We had a few stocks heading down, the tech stocks, and the rest of the market was going up. And that was also supposed to be a bad thing. Neither of those eventuated. It was all BS. And I suspect, can't guarantee, but I suspect that the same thing is going to be BS again, where we see IT leading up as the only sector at a high. For now, you can see here, the table below shows every instance the S&P 500's forward returns, the lack of participation, meaning other stocks aren't there, at new highs from other sectors had no negative impact. So the fact that maybe there's only a few taking the markets higher hasn't had any negative impact when you look at the probabilities. It allows you to put the confidence on your side that it is most likely, no guarantees, the markets will potentially continue to go up. But even so, we're looking at here, the pesky signal from 1929. There's your one result there after 6 and 12 months that were negative. It happened from 1929, so that was the one that failed. But even then, the S&P gained double digits before rolling over. So in 1929, there was a signal right around here. And then 3 months later, it had gained double digits. Essentially 2 months later, it got to 9.8%. So after that point, yes, it rolled over 22%. Very, very bad after that point. But of course, if you're following your swing charts, your cycle, then hopefully you start to stay a little bit safer in the market than the masses do. Now, there's only 8 signals, I hear you, but nonetheless, you can see that when these have been up, when the signal is hit, it doesn't mean the market must roll over from that point. It's been a relatively good time over the last few decades. Now I'm going to save this particular piece of data for the next video. If you want to pause it and have a look, go for gold. Otherwise, we're going to leave some more fantastic news for the markets for the next video. But we need to get onto Bitcoin. It's been a long time here. It's the fattest opportunity that we are facing right now. 50% hit. Remember, we looked at this on the Wyckoff schematic as the market was starting to gain a little bit of pace to the upside. Last point of supply, potentially. We throw this up here again, or in fact, get rid of this because we've basically done the collapse, we've done the breakdown, everything is sorted. And I think we'll be looking to get into some sort of accumulation over the coming weeks as we've looked at before based on those cycles. So let's get that out of the way. We're in our phase E. The main reason I brought this up is we looked at the downtrend and then the 50% retrace. Market has hit that beautiful little triple header here with the pullback. Let's take a look at the volume. You see the volume has also increased on the 4-hour. It is a shorter term chart, which means we're most likely going to see shorter term moves. So this may only last today, maybe it lasts a couple of days and we start to head back, fill in some of the gaps to the downside, take out some of the swing bottoms, but let's take it one step at a time. The step that we've seen, rejection at the 50%, triple header, we've got some nice volume to the downside. It seems like the market wants to try and test some of these lower prices to see if there is any demand coming in at higher prices. So far, the demand has been at around 41,500, pushed it to 43,800, dead on. Can you guess it? Again, 50% level, and it now looks like it wants to come back and test the levels here at 42 and potentially back down here at around 41.8. What I aim to do in each of the videos is just make you aware of what's going on out in the macro landscape. It's all too easy for us to get very tunnel visioned onto crypto and altcoins only, and we lose track of what's going on out in the rest of the markets. That's why I bring up the real estate cycles quite often, because I suspect as we get closer to the peak of Bitcoin and cryptos, it's going to go through our head thinking that these markets are never going to go down based on all of the previous jargon that we've heard over the last 12 months or so, where this coin's doing X certain things to the environment and the ecosystem and it's never going to go down. That stuff could potentially destroy a lot of those gains. So although we find ourselves in some of the fattest, greatest opportunities right now, the hardest part of the journey is still ahead. The hardest part is going to be selling. Like we know here, knowing when to sell becomes one of the biggest problems for traders. Not knowing which altcoin to pick, because essentially you get some low cap stuff. Essentially most things are going to pump 5, 10, 20x. It's knowing when to sell that is going to be a very, very difficult piece of the pie, especially when we're at the most bubbly tops that we see. It's the frothy part of the markets. Now, over to the altcoin market cap here. Now, this is the true altcoin market cap, as we've excluded Bitcoin, Ethereum, and stable coins from it. We are into this little space here. I've got this circled right now because we can see that, well, for the lower end, possibility somewhere around that sort of 280 to 300 billion mark, which were previous resistance levels. And in terms of time, we have been down now for 1, 2, 3, 4, and we're into our 5th week down from the high. But basically 4 weeks down, lower highs and mostly lower lows there as well before making a fresh high here. Now in this time bubble, it takes us out to the halving, which is roughly around mid-April as the date currently stands. Going back to the previous cycle, this is what it looked like going into the halving as well. We had the correction somewhere around mid-February. This time, it seems like it's around mid-January. So pretty decent. If you look back around 4 years, the cycle seems to be relatively on track, barring a few weeks there. Now, the correction here was bigger. I don't expect this correction to be anything like a COVID pandemic crash. All I'm looking at here is the chance, like we're seeing, of a correction. Now, if we are in this correction, and this correction is nearly over, now I'm saying if, because when we look at the timeframes here, there's your top 1, 2, 3, 4 weeks down, plus a little bit of a sideways week here, so 4 to 5. We are definitely in that zone. We're in that timing zone of the possibility of the correction being done. If we are to come down a little more from where we sit, then we have, as I pointed out, some of those support and resistance levels to the downside. Now, last week did see a bottom roughly around 310 billion. So it doesn't seem like there is much more to the downside if the market is going to break past last week's low. So I'm not getting too greedy here. I'm not trying to wait for this market to come back into this previous accumulation zone. I suspect that's not going to happen overall. Now, I suspect we'll start to see the market lead up into the halving. The halving last time was around mid-May. So you can see it was already doing a few weeks up, but that could be because of the significant fall that it had. So basically like a rubber band. You've seen the crash and the market's basically trying to correct. Then it went sideways into that halving, had a little bit more of a bounce, and basically game on from that point. So what do you do from these times? If you don't have a plan already, get that in check. If you don't have a watch list, get that going. If you don't know which cryptos to be buying, start your watch list and start reviewing those particular cryptocurrencies, because I don't think there is that much time left before the markets really do start to take off. Now remember, always go back to this. Knowing when to sell is going to be the most difficult. I don't think choosing the best alts is going to be the most difficult. Most of the alts are going to have some sort of move. A nice easy rule of thumb, which has worked from previous cycles, is don't get sucked into projects from the previous cycles. There are going to be some that do well, and I hear it already. You're going to hear Cardano people. You're going to hear probably DOT people. There's going to be a few others there from the older generations of cryptos. Some of them are going to do better. We know Solana has been doing much, much better. Doge may do much, much better. When you look at things from the old school, they don't seem to have the same sort of sticking power or pumpable power as they once did. So if you're looking for stuff that is going to give you bigger gains, one easy rule of thumb is to stay away from a lot of the old crap. Although they may do some pumps, you want to go for the stuff that has more pumpability. What are those cryptos? There is a lot of them. We could throw things up like Render. It has had some pretty good moves to the upside. There's been a lot of talk around TIA. There's been a lot of talk around SUI. So watch for things that are looking to break out as opposed to break down, like your Maddox. So if you have been finding value from the channel, you can support the channel by using the links down below. You don't have to. You've got BitGet, Bybit, and for the Aussies, you've got SwiftX there as well. Personally, I set up multiple exchanges because some exchanges don't have the cryptocurrencies that I want to trade on there. And so if I'm in a panic and I need to get into the next latest crypto, I want to make sure I have those exchanges opened in time as opposed to try and do them in the heat of the moment. Hopefully you've enjoyed today's title as much as I have enjoyed using the words throughout the video. Let's have a look to the downside on Bitcoin over the coming days. $41,200 is the 50% level at the moment. Should yesterday's high at $43,872 remain intact? Thanks again, guys. Use the links if you want to support the channel. Otherwise, you do you, and I'll see you guys at the next video. Until then, take care and peace out.